Hello everyone, today's video is all about the marriage allowance. Now, what prompted me to do this video was an email that I got saying, have you claimed the marriage allowance? Because if you haven't, we can help you claim. So like anything in the tax world, where there's money to be had in terms of tax refunds and claims, there are going to be companies out there who want to make a few quid off the back of helping people claim such tax reliefs, and there's nothing wrong with that. That is perfectly legit. These are all bona fide government-backed forms of tax planning, tax breaks that thousands of people don't claim. So, often you hear in the press things about what they call the tax gap, which is the money that the government think that they should be collecting, which they don't collect, which I think they've tried to quantify it, say it's about 35, 40 billion. But then what they don't tell you so much about is the reverse tax gap, which is other analysts reckon it's a bit less, but it's still about 15 billion pounds, and 15 billion pounds of tax breaks which people aren't claiming, which they are entitled to. And the marriage allowance is one of these. So what is it? So just a sort of a recap on husband and wife taxation, if you will. For many decades in the UK, the income and how it was taxed on the earnings of husbands and wives were interlinked. And then in 1990, that was decoupled, and we had this concept of independent taxation. So a husband is taxed on his earnings, and a wife is taxed on her earnings. And they're not, it's irrelevant if they are even married from a tax point of view for income tax and for tax on earnings and employment income and so forth. The only areas where it's advantageous from a tax point of view to be married is in things like inheritance tax. So when you die, everything goes tax-free to your spouse. So there's no inheritance tax if you leave it all to your spouse. So this is why you'll often see high-profile cases in the press of famous celebrities who get married on their deathbeds. I think the most high-profile probably was Michael Winner, lifelong bachelor until he married when he was almost 80, and then he passed away not long after. And the reason that he did that was to avoid death duties, inheritance tax. So that's a benefit of being married from a tax point of view. Also, capital gains tax, you can transfer assets between spouses tax-free, but these are the so-called capital taxes. So in terms of income tax, since 1990, we had this concept of independent taxation. Doesn't matter if you're married, no particular perks or breaks for being married, husband and wife taxed separately. Now, that all changed a few years ago when the government brought in a transferable nil rate band. So transferable personal allowance. So what is this? Well, the best way to describe it is if I give you an example. So let's say you've got a spouse A who earns £10,000 a year and spouse B who earns £30,000 a year. So between them they earn 40 grand. Now, spouse A, because they earn under the personal allowance, remember the personal allowance is the amount of earnings or income that every man, woman and child can have before they start paying income tax. Currently £12,500. So spouse A who earns 10 grand is not paying any tax, but they could in fact earn another 2.5 grand before they'd even have to start worrying about tax because they are under that personal allowance threshold. Whereas their other half, spouse B, they are earning 30 grand a year, so they are paying tax. They are a basic rate taxpayer in the basic rate band, and anything that they earn will be at the marginal rate of 20%. Remember that the 40% doesn't kick in until you earn 50 grand. So spouse A paying 0, spouse B 20%. Now, this transferable personal allowance, the so-called marriage allowance, how it works, it says that one spouse can transfer up to £1,250 of their personal allowance to the other spouse. So in this case, spouse A, they have capacity to absorb another 2,500 of personal allowance. Like I said, they're earning 10 grand a year, but they don't start paying any tax till they earn 12 and a half. So they can transfer this 1,250 to their other half, spouse B. So spouse B, therefore, what it does, you add that 1,250 on top of their own 12,500 personal allowance. Basically, it just delays the point at which they start paying tax. So they're still a 20% taxpayer, but it's just that they've got an extra £1,250 tax-free. Now, as a 20% taxpayer, that's the equivalent of them saving £250 of tax. So making the transfer, electing for this transfer to happen, will save £250 of tax. So not bad. And this is why you see these companies springing up and sending out thousands and thousands of emails to people saying, have you claimed this thing? Because often people haven't. And whether it be through lack of knowledge or lethargy or whatever. And so these companies say, look, we'll do it for you and we'll take a cut. I don't know if they're taking 50 quid or whatever for every 250, but most people will, if they haven't thought of it, might sign up and go with it. So it's quite legitimate to do. The other condition is that the spouse who receives the tax-free allowance has to be a basic rate taxpayer. So in my example, had you had spouse A on 10,000 and spouse B on 60,000, you couldn't do it because spouse B is paying tax at 40%, and that's just not in the rules. It's the government brought this in to help spouses on more modest incomes, if you will. So the first spouse hasn't got to be paying any tax, and the second spouse has got to be paying just basic rate tax of 20%. They're the conditions, they're the parameters. And if you tick those boxes, then you can do it. So, like I said, the maximum you can transfer is 1,250. So in this example, let's change it a bit. Let's say spouse A earned £11,500 and spouse B earned 30,000, same as before. But spouse A, there's only £1,000 headroom left between what they earn of 11.5 and what the personal allowances of 12.5. So the maximum they can transfer is that £1,000, not the 1,250, because they haven't got the headroom to do so because they're already earning 11.5 grand. So, but they can still transfer £1,000 to their spouse. 20% saving of £1,000 is 200 quid. So it's still a good saving for not doing anything, just transferring, ticking a box. So it's still worth doing. So as I say, any spouse who is not paying tax because they earn less than 12,500 can transfer up to £1,250 worth of available personal allowance to their spouse who is also a basic rate taxpayer. And thus, once more, as was the case before 1990, there is a linkage between husband and wife taxation for income tax purposes. But it certainly is a beneficial thing that I would suggest thousands of people aren't cottoning onto, hence the reason for this mass marketing of emails from some of these firms who are willing to make the claims on behalf of the taxpayers. But it is perfectly legit if you get one of these emails. Well, I don't know, I can't vouch for the firms that are sending them, but in terms of the tax break is legit. It's available. So if it applies to you, please do think about it, try and claim it. Like I said, it's worth up to £250 cash, tax saving in a year. So it's not to be sneezed at. So that's just an overview of the so-called marriage allowance. If you like this video, do please subscribe right there, and I will see you soon.